I'm Bambi Francisco, and I'm speaking with Raj Kapoor. He is the Managing Director at Mayfield Fund. Raj, thanks for joining me.
Thank you.
Well, a recent report from the National Venture Capital Association showed that the returns for VCs aren't that great. 9-year returns about -5%. What's happening in the VC industry?
Well, we went through a really difficult time overall in the tech industry during those 9 or 10-year periods. The good news is that if you look over the long run, since the venture capital industry has been around, we go through it's a very cyclical business. So there will be periods of times where the returns are low, there's not a lot of exits, there's too much money in the system, and then that falls by a time when the returns are better. So we've looked at the data, and the best returns are made investing in the trough, which is where we are right now. So the returns have historically been bad, but I think going forward there's a lot of opportunity that's there. Exits are certainly challenging, but we're seeing no shortage of deal flow. Okay,
I want to talk about exits, but you have a $400 million fund. Is it, I don't know when you're raising your next fund, but because of these returns, do you think that's been difficult, or it's going to be difficult attracting new dollars for a new fund?
I think every VC is going to be, it's going to be harder to raise money. There's no doubt about it going forward. That said, the things that they're looking for, it's been proven that firms with a long-term brand and a franchise tend to perform better. Firms that are performing better, the top 25%, the top 10%, typically they haven't had the challenges that have been there with fundraising. We were fortunate enough to raise our fund in September 2008, $400 million fund, and it happened fairly quickly. Yeah. But we've got to prove to the world and continue to get returns, and that's going to be really important, but we have a runway to show that.
That's great timing with the fund,
September
2008. I guess only better would be October 15, 2008. 14, 2008. Now, you talked about deal flow being really good. What type of deals are you seeing that you're really, really jazzed about?
So there's an explosion of innovation that's happening in mobile right now. I think Apple has led the way, but I don't think it just stops at applications. I think it's about rethinking all the plumbing behind data when it pertains to mobile, geodata. There's a lot of excitement around energy tech, around making the grid smarter, around figuring out ways, not just the next generation solar material that's there, but how can we actually reduce the load that's on the utility system. So there's ideas that are there. There's ideas around the internet in terms of the video explosion that's happening. Media is still continuing to change significantly. We haven't seen the end of that. So there's just a number of trends. And then, right now, maybe only 20% of the world's population is on the internet. So there's still 80% to go for all that growth.
You're still optimistic. So would it be fair to say that you're a consumer internet, though your expertise, and you invested
I look at kind of internet infrastructure, consumer internet.
So that's what, if anyone has a consumer internet
or mobile,
company,
which I think is looking more and more like the internet.
Where do you see too many of the Me Too ideas?
I've seen too many video platform companies.
Okay.
There's probably 20 of them that are out there. Well, 20 that I've seen, probably 100 that are out there. Yeah. Someone that will help you manage video because it's a hot space, and they'll insert advertising, et cetera, et cetera, et cetera.
Right.
The challenge is just differentiation.
Is it too early for video still?
I don't think it's too early. I just think there's too many players that are there, and they're offering, one shade of color different than the next one.
Yeah. So, some of the community has asked me to ask venture capitalists that I speak to, how should they value themselves? We have so many smart people, members of our community, that really don't have the understanding about how they should start off. If you're an early stage company, about how they should value themselves. Should it be $2 million, $3 million, $4 million, $5 million? Where are they? 500,000.
That's a good question. Venture capitalists are asking that question to entrepreneurs and to everyone out there. Early stage valuation is super tricky. It's really, the simple, and it sounds glib, but the answer is it's whatever the market can bear. Right. And if you look at if you look at kind of historically, if a company is relatively new, maybe they've got a website or product that just went out the door and they're looking to raise their first institutional round, numbers that you see are anywhere from a $1 million pre-money up to a $5 million pre-money. Some of them, if the founder has done some amazing things, maybe they can even get a $10 million pre-money, when they're just launching, that's out the door. But a lot of it depends at that point around, is this a really great idea? How excited is the venture community? How much competition you have for your deal? If there's only one bidder and they know it, they're going to bring the valuation down as low as they possibly can.
Right.
So, the key to valuation is getting enough interest out there and then seeing where that number, but I haven't seen it go way beyond the 10, and I haven't seen falling below the $1 million range, and then it just depends on who you are and what you can get.
But doesn't it also depend on the market? So at today's market,
Today's market certainly is lower than it used to be.
Lower than it used to be,
Yes.
but it's still between 1 and 10.
Yeah, well, and I think what's happening is there's, in general, in early stage, especially companies that have a little momentum, there's a bifurcation of valuations right now.
Okay.
There are deals that are still happening in the social gaming space, and some hot sectors that are happening at really high valuations relative to the revenue of the company. And even some founding teams that are really hot that are happening, because there's still a lot of money that's on the sidelines looking for high quality deals.
And they'll chase after those really good ones.
Yep, what everyone perceives as the really good ones.
Okay, Raj. Well, we wish you best of luck spending that $400 million. Of course, it's been a year, but you've already spent in 3 companies, so you've got a way to go. 3
investments.
Okay, great. So I guess he's still looking to invest, everyone out there. Okay, Raj, thanks very much.
Thank you.
I've been speaking with Raj Kapoor. He's the Managing Director at Mayfield Fund. I'm Bambi Francisco.